Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome out for a wonderful show that's for you and about you. Those of you who work so hard for your money and you're ready for your money to start working harder for you now. You want that freedom, that cash flow, that prosperity today, not 30 or 40 bazillion years from now, but right now. So you have that freedom, that life to do what you love with those you love whenever the heck you want. But it's just so much more than that, right, guys? Because it's not just about making you guys rich. It's so much more. It's about making you guys ripplers in the sense that you create a ripple effect through the lives of others, because as you're blessed financially, you can bless the lives of those around you. And that's what gives me so much joy to work with you guys, to be able to help bless you with that ripple effect. And I can create that through you as well. And I appreciate you guys binging and sharing and everything. Like I've loved watching this show grow each and every week. And you guys are a big part of that. So thank you so much for being a part of this movement and part of this cause. Here's a quick reminder, check out our website, moneyripples.com. We've got some great blogs and podcasts, of course, but there's even the ebook you can get on there called Beyond Rice and Beans, 7 Secrets to Free Up Cash Today, which is slapping Ramsey in the face and saying, here's how to get the cash now and be abundant. So check it out. All right, so on today's show, I got a special guest here, Randy Lawrence. And now I have to be honest, this is the guy that I've been kind of wanting to keep secret from you, because up till now, only my clients have known about him because he's amazing. He's awesome. I mean, he's spent years in, having his own management company. But here's the cool thing that I love is that since 2003, he's been doing real estate investing, primarily with multifamily apartments and things like that. And get this, guys, in the last 17 years, he has paid his investors every time through 2 different recessions that we've had, including the Great Recession, and even now. And that's one of the huge things that I think speaks volumes about Randy here. And so I'm excited to have him on the show and talk to you guys about his experience and, really about what he does. So Randy, welcome to our show.
Awesome, brother. Hey, thank you so much. I'm super excited to be on the show. I love what you do. Especially just saying, hey, we're punching Dave Ramsey in the face that, and again, love, Dave Ramsey as a human being, just probably not in the rice and beans approach, so
yes.
That too many people kind of get in this mindset. Like, of course, of like, okay, I can, penny pinch my way to, the financial freedom point 50 years in the future. It's like, it's never going to happen. So just love what you do. So I'm totally glad to be on the show today. And, like what you said, we started our company, in the real estate arena, 2003. Prior to that, for 15 years, I was a stockbroker and a registered investment advisor, owned my own firm. We managed money for people in a traditional way. So, don't hate me for that. But here's what I saw, right? So we're managing stocks, options, bonds, mutual funds, the whole bit. And then I bought my first small multifamily apartment, or duplex rather, in 1999, and just saw, wow, look at the power of the return, the cash flow. And in 2003, we really focused in, bought our first apartment complex. And because I saw the power of the return that real estate was providing at a lower risk than what we were achieving in our overall managed portfolio. And then it really began to be where we made that transition of focus in 2006, sold my money management company, just because, again, we decided we're exclusively going to focus on real estate and eschew any of that stock and options and, just any of the traditional investments, because it just didn't provide as good a results for us personally as investors, but also for our clients. Because again, even too, like you said, at that time we were, paying probably, it was, 10 or 12% preferred type dividend. And, that's just not consistently made, year in, year out in the stock market. Now, again, you can say, okay, well, on average over 30 years and it's up in the, but again, when I really looked at it, the truth of the matter is, it's, you're down 30% one year. You got to make back 50% the next year.
That's right.
To get back to break even. And then God forbid somebody's taking a 6 or 7% distribution. Now it's even greater, so we saw all that. And that was the motivation to really start focusing into real estate.
It's fascinating you had that story because 2006 was the year that I shut down my financial advisory business, right? It was March of '06. In
Yeah,
fact, I was like, I'm
yeah,
done.
yeah,
I see these guys are doing real estate or business and they're like way wealthier than
yeah.
any of us as financial advisors making commissions selling stuff that hasn't worked for our clients, right?
Yeah, yeah. It's, and it really is the a lot of the products offerings, 401k, all of that. This really, provides a greater benefit for the Wall Street firms that hold the money, right? Because that's the
Hmm.
deal. Is okay, they've got 5 billion in this fund, and they're earning X% fees on it, and that's really the name of the game. And
Right.
so for me, I love real estate. I love the creativity of it. I love the entrepreneurial aspect of it, and I also love what it's able to do, in impacting other people. Like you said, with the money ripples. Like I just did a show on our podcast where one of the guys, a doctor, is invested with us in real estate. His previous advisors had him on a plan like where, maybe at 90, he skids across the finish line and runs out of money. So he's like, he's hoping to die by 90. Like,
Right.
what kind of plan is that? And so now he's super excited. They've got enough money to help fund charities and orphanages and travel and, all that because of the power of real estate. And so I just love what it does for our investors and clients and the people that invest with us.
Yeah.
Super exciting.
Now, how do you do your investing? Like, what is it that makes yours so unique?
Well, so we're very focused, again, now where we are is focused, probably over the last 4 to 5 years, large multifamily apartment complexes,
Hmm.
75 to 200-ish unit type complexes. We also have a specific focus that we're looking for, complexes that are genuine, like blue collar, lower tier, white collar workers, the person making 35 to $50,000 a year. That really is the staple of the job growth that we believe is taking place in this country and over the next 20 years. That's really the driving force of the lower tier jobs that'll be created. And then the unique thing of that product class, you can't build it for the cost of construction as to what the rents are. So it is a finite product with an ever increasing demand. And of course,
Right.
economics, it's like that is a good mix to be in. So you've got fixed supply and growing demand. That's why you see rents that continue to grow, because you have an ever increasing demand for it. And so we have a special sauce, if you will, where we focus on, benefiting the tenants, providing a better quality of place to live. And then with that, we're able to get then what would be considered current market rent. So for an example, we may have a property where it's, typically they're built in the 70s, the interiors are dated, and they're maybe getting 800 on the rent. Some of the
Yeah.
competitors in the submarket, say 1, 2, or 3, they're getting 925, 950, but they also are offering a nicer kind of appearing product. And so we're able to go in, purchase the complex, uh, implement our professional management. So again, save money on expenses compared to the mom and pop ish operation that's going on, or the crappy third party management that's running it. And then with that, we implement our renovation plan where for about $3,800 a door, we're able
Mhm.
to renovate, update, make it look like a nice 2000s unit apartment, and then also fix up the exteriors for any of the deferred maintenance. So that kind of those three things we attack all at once. And then now within 3 months, you've got this nice looking exterior. You've got a nice new finished apartment. You've got a well-run management team that's running the complex. And so now it's worth the 950 rent, what's going on in that market, because it's a clean, nice, quality, updated, affordable place to live.
I love that. I,
Yeah,
I I love that from a few different standpoints because one, you're actually trying to really build value in a sense to be able to increase profits, right? So you
for
don't have
sure.
to increase rent. Well, you do increase rents eventually, but
Yeah,
you're doing stuff in a way that because you buy it from people that haven't managed it well, you turn it around to use your expertise to manage it better.
yeah.
And then on top of that, you actually make it better. I mean, you help
Sure.
make the community better because of it too.
Yeah. It's also really a very strategic and secure type process as well, too,
Yeah.
because, when we're buying a complex, we bought one in Georgia. It's like
Mhm.
$7.7 million, 100 and maybe 30 units or something like that. And the as completed value appraised for, I think, just under $11 million. Because again, what we're demonstrating is that, we're not trying to lead the market in rents with an unknown variable. The market's
Mhm.
already proven that the rent is, in that earlier example, 950.
Yeah.
And so what we're doing is we're demonstrating if we fix this place up to make it worth that,
Mhm.
then those rents will be obtained. And if we do that, then the value of the property is increased because we have a higher net operating income. And I would also say the tenants that live there or rent there, they're happier because there's a better
Mhm.
quality of life for them. Now,
Yeah.
again, probably sometimes anywhere from 10 to 20% of the bottom tier tenants, they're not the quality of tenants that we want in the
Mhm.
property, and they're not also going to be staying the distance over that year and a half when those renovations are going on.
Yeah.
Nothing against them as human beings, but it's just
Mm.
we're trying to improve the quality of life for the whole of the complex, not just
Mhm.
one person. And that's what we've been able to achieve. And because most of the properties we buy are, say 85, 90, 95% occupied, they're cash flow positive day one. We
Mhm.
actually are able to begin the renovation plan kind of what's called on the turn. So if we've got 10 leases coming up every month, maybe 4 of those leases don't renew at the increased rate, and we go in and we're able to renovate those 4. So it just becomes a process of like, a very methodical process where we're
Yeah.
renovating 4 units a month, offering them out at here's the newly renovated rate, and then
Mm.
the other ones are, not at the same rate as that, and then we just work through the whole lease roll over the course of a year and a half, and it's a very effective approach. We've got it very dialed in, is how I guess I would describe it.
Yeah, I love that. Well, and that obviously shows just why it works so well for you.
For
Um,
sure. It's like kind of I'm a one trick pony, but it's a darn good trick. You know what I mean? It's like we are very focused. I get people all the time because of the success we've had. They contact, oh my God, hey dude, I've got this great ground up construction project in Vegas, and man, you're gonna make all this money. And I'm like, dude, I have no interest in that. Right.
uh-huh.
Because, and nothing against somebody that does that, right? But
Mhm.
it's just that's not our focus. Our focus is very strategic, because even too, it's like I've been through the fire, like you said, through
Mhm.
the recessions, managed money during a recession, been through real estate recessions. And it's like I've become very strategic as a result of that fire. A lot of people out there, maybe they've been around the block 3, 4, 5 years. They don't know nothing but good times. And it's like you've
Mhm.
got to be strategic. And so this type of offering that we work with is quality affordable housing. So, and again, in that market example, we're at 950, offering a better, newer product than the competitors at 950 or 975.
Mhm.
People aren't leaving our place to go rent there. The guy that's maybe in another apartment complex that's a little bit higher grade, paying 1100,
Mhm.
when he gets a pinch on his job and they cut his salary or his wife loses her job, that's the guy he's looking to move down to the 950, and he's
Mhm.
looking who's got the best option at 950, and that'd be us. So
Right.
it's like, we're having a better positioning when the economic slowdown occurs, and that's of course by design.
Yeah, I love that. And actually, that was leading to my next question too, which is, we're starting to see the market kind of transition a little bit, right?
Yep.
And always the fear that I hear from people is, yeah, but isn't real estate, isn't it kind of the point where it's too high, or, is this really a good time to do it? I mean, what are your thoughts when you hear that kind of
Yeah,
stuff?
for sure. Now, I would agree on some level. I see people paying too much
Hmm.
for properties, and we see that all the time. We may go through 30, 40, 50 properties to find one that really is good. And then
Yeah.
the other reality is we don't kind of fudge the numbers and push it to the limit. See, that's what some people
Mm.
are doing, is they're going, okay, well, I'm going to be able to save money here. I'm going to be able to get this. It's like everything under the sun has to go exactly right with no blip for that to be achieved. It's just not
Yep.
realistic. And I told that to a guy this morning that we're purchasing some properties in Oklahoma. And I said, with our management team member, I said, dude, look, I don't come off of the system, right? If it doesn't fit the appropriate underwriting of our system, we don't buy it. He's
Hmm.
like, wow, that's so refreshing to hear that that's your mandate, because so many people are not doing that. And
Yeah.
so it makes our job harder because you've got to go through more properties to find the ones that good. But here's the trick. It makes our job easier, say 3 years from now, when
Right.
things have slowed down and other people are getting their butt handed to them. We have been, smart and efficient, and that's not us. So I'd rather have the short-term pain of not getting the deal now
Hmm.
than to have, okay, we got the deal now, but now 3 years from now, when there's a slowdown, or 2 years from now it's
Hmm.
painful. It's like, well, you
Right.
can't get out of that pain, so.
And I'll tell you, like I've seen, especially in the last few years, multifamily and apartment deals have been going like everywhere. Like everybody
Yes.
seems to be investing in them,
Oh,
right?
for sure. Yeah.
I mean, do you see that as an opportunity for you coming up?
Oh yeah, for sure. Because you've got plenty of people that are not dialed in on operations. Yeah, they've
Mhm.
been able to get some money together, or they raised money or whatever and bought a place, but they're not real skilled in terms of their professionalism, their
Mm.
operations, their systems and accountability. And no doubt when the market shifts a bit,
Hmm.
those people that are weak are going to get, the kind of things handed to them. And that in
Yeah.
turn will be a buying opportunity for us. I've told that to people. This decade is going to be the decade of operations.
Yeah.
And, because your real money is made in operations. Yes,
Hmm.
you've got to pay the right price when you buy it, but the real money is made through having the proper professional systems, the right people on the team, and the accountabilities to drive performance on a daily and weekly basis. And
Right.
a lot of people don't have that set up where us as a company and our team members do. And though people would say, yeah, Randy's a nice guy, like, dude, I take this stuff uber seriously, where it's like we have extreme accountability on our team, and everybody knows, hey, look, you got to get the result.
Hmm.
Your efforts to try don't mean jack crap, right? It's like, hey, I tried it. No, it's like you've got to get that renovated, got to get it finished, and they have to be done by Friday.
Yeah.
So, like, whatever you need to do, figure it out and get it done, because that's the result that has to be achieved. And so,
Hmm.
that's the intensity that we approach it, and that's what helps drive performance. And so, even too, you've got people out there in the space that are not even full-time real
Hmm.
estate investors, where they're, oh, I'm buying an apartment, and their day job is being an engineer. It's like, dude, like, you're running a $6 million asset, kind of what, part-time in the evening in between your day job. It's like, that's ridiculous. Now,
Right.
again, the last 5 years where we've had cap rate compression and the market's gone up, you could be blind, deaf, and stupid and have made money, but that's not going to be the case. And we already see that now. We've bought properties even this last year in November, December, from guys that kind of crapped out
Hmm.
on, they had a plan,
Hmm.
they thought they had a plan, and the plan didn't work so well because they didn't know how to work the plan operationally. And then we swooped in and bought the property at a monster deal for us and our investors. And now we're executing the crap out of the plan, and it's working,
Right.
you know.
It works.
Yeah, for sure. I mean, look, it's hard work nobody really likes, right? It's
Yeah.
just that people have gotten away from that. But it's like, I enjoy delivering value, and it takes work to deliver value, because that's really the secret. You've got to deliver extreme value to then have economic reward come back to you. And
Yeah.
that's what we do. It's like, our two driving forces are, one, we want to transform the lives of the people that live in our complex. We want to provide them a better quality of life at a good, affordable price where they can have a home and raise their family. And
Hmm.
then two, we want to help as many investors as possible experience economic freedom. Because
Right.
again, like, I know back in 15, we had a lady, she was invested with us at that time, probably 13 years ish. She came to me and said, Randy, I'm so grateful for what you've done for me and my family. And I'm like, well, what do you mean? And she's like, well, because of investing with you, when the economy collapsed, your money was always there, helped buoy my business and keep it afloat. And then in
Right.
9 and 10, both my kids needed to go to college. That income paid for their college tuition, and one became a teacher, the other a firefighter. And
Hmm.
then she said, now I'm fixing to sell my business in a commercial plaza she had, put that money with you so I can retire and take care of my mom who's dying of Alzheimer's.
Yeah.
And so it was like, that was just a powerful God moment for me to see, like, wow, that's how 3 generations of this lady's family have been changed forever in a positive way because
Yeah.
of the power of real estate and what we do. And so that really kind of motivated me to say, like, you know what would it be like in your portfolio if for 17 years you always made double-digit returns and never lost
Hmm.
a penny? And for everybody, it's like it's a game changer. They're hey, I wouldn't have lost 400,000. I'd be to X. You know what I mean?
Yep.
And so that really have motivated me and the team. That's now our two kind of driving forces because I don't have to keep doing what I'm doing,
Hmm.
but we're building a company that will last past my grandchildren, which I don't even have yet. My daughter's only 16, so I've got a long way to go. But our company is being built out to last past my lifetime and to provide financial freedom to people 3 generations down the road.
Yeah. You're not just building a company, you're building a legacy, right?
For sure. I mean, that's so cool. Like I go back to the Dr. Brad that I interviewed as a client. Um, like it's changed him and his wife's life. It's changed. They do an orphanage in Costa Rica. They have a Christian camp down the road from their house that they help support. I
Yeah.
mean, just all these cool, like you call it, money ripples, all these things that ripple across these effect. It's a legacy for them now, right? They're now, instead of cutting the Costa Rica orphanage trip, they're going to Costa Rica every year to support these orphans in Costa
Right.
Rica. Like,
Right.
how cool is that? I mean, and we're a part of that by what we're doing at our apartment complex in Atlanta or Florida or Oklahoma,
Yeah.
because they're a part of it. It's like it's an amazing thing how God set it up. If you really deliver value to help people, it really just expands out what comes back to you and how many more people they're able to help.
Amen to that, man.
Yeah. So
Oh,
awesome. So awesome. And I know I mean, I'm super excited for your show because I know like you are just like geared up helping so many people and just showing them stuff that like, they don't learn from Dave Ramsey. It's like,
mhm.
yeah, somebody's got 800,000, $2 million, but their financial pictures, like, they don't have it all dialed in of what they could be doing. And
Right.
you're freeing up more money to pay down debt and, getting them out of, investments that are maybe not serving them, but serving the people that sold them. So
That's
that's
right.
just an awesome thing to see, and a mission that you're on. I love being a part of it.
Awesome, man. So Randy, tell us like what kind of an investor do you like to have in your fund? Like what kind of investors can qualify to be in your
Yeah,
fund?
for sure. So we have, oftentimes two different scenarios. One where we have an accredited investor opportunity where somebody, has to be defined as an accredited investor.
Hmm.
Other times where we have apartment complexes we do where they have to have an existing relationship with us and be a sophisticated investor. Probably
Sure.
the predominance of the opportunities are in the accredited investor arena, just because that's kind of the nature of what it is.
Yeah.
And then the structure of it is where we have the complex, we may have 6, 7, 8 investors that invest with us in that one complex. They have
Mhm.
an equity ownership interest in that complex. So it's a very secure position because they own the actual portion of the company that owns that one complex. And then the way we structure it to the investors is that they're getting a preferred dividend on cash flow every quarter. So they're getting a check for 7% roughly every quarter based on their investment amount. There's another 5% that's accruing that they get when the property's sold, so that's where it's a preferred 12%. And then
Mhm.
in addition to that, because they're an equity owner in the complex, they also get tax benefits of depreciation that,
Right.
roughly speaking, every one of them is different, because of the, cost segregation, the appraisal, the value, the
Mhm.
purchase price, all that stuff. But again, roughly speaking, on every 100,000 that they invest, they're getting anywhere from 38 to maybe 43,000 of depreciation, which that's huge because
Yeah.
the first year they got, let's say on 100 grand, they got 7,000 of actual money income, but
Mhm.
then their K1 shows a loss of, $41,320.
Right.
So it's like they didn't pay any tax on the 7,000, and then that depreciation can roll over and
Mhm.
offset the income from the next year for year 2 or year 3. And
Right.
it's and because the government has incentivized the tax structure because they want people to invest in helping to create affordable housing.
Yeah.
That's just the nature of it. It's no real smoke and mirror. It's the being an intelligent investor, recognizing the trends that exist, the opportunities that exist, and the benefits of the tax law structure for those trends, you know. So
Man,
and
love it.
most people, they're like, whoa, you know, like, wow, I'm getting this great return, and then like the tax benefits, it's
Pay
like,
no tax on it.
yeah, for sure. They're like, wow, you know, so it really is an amazing thing. And that's also part of, like, for me, I guess I want to be kind of the Pied Piper of telling people, you know, just like that old, I think, Disney cartoon, the Pied Piper's blowing the little flute. And I want to share that message just like you do, so that people recognize, you know what, there is a better way. I can get better returns, have greater security, have better tax benefits. It's possible.
Absolutely, man. Well, if people want to reach out to you guys or learn more about what you guys offer there, where would they go?
Yeah, for sure. You can go right to our website, prosperitycapitalpartners.net, prosperitycapitalpartners.net, and you've got, you know, information on us there, testimonial videos. There's a contact button as well. And then also, you know, our podcast, The Real Estate Preacher, is out there, of course, on iTunes, where you've got lots of episodes talking about various topics and information as well. But definitely love to be able to be a help and deliver value in any way that we can.
Awesome. Yeah, we'll be sure to put those links in the show notes. That's great, man.
Awesome, brother. Hey, thank you so much. It's great to see you, and look forward to connecting with you, brother. Same
here. Appreciate your time and all that value, man. You're up to some amazing things, and you are the rippler that we talked about on this show, man. You're embodying it perfectly. So I love that, man. So thank you so much.
Thank you, brother.
For the rest of you guys, thanks for joining us today. Remember, check out his stuff. And, you know, again, we'll have that in the show notes for you, so you'll be able to click on the links and find out more there. So check it out, guys. And I hope you make a wonderful and prosperous week. We'll see you later.